What is going on, everyone? My name is Kenneth Beard here with Stock Indices, where I'll go over my thoughts on the overall stock market and what I think is to be coming up. I make these videos for you all to give you all informative content for you to get a better understanding of what is going on in the overall economy, as well as putting that together with looking at basics, technical analysis, and coming up with an assumption so we can make good money making trades. So, if you're watching this video here today, I thank you for tuning in. I've been doing these videos for a while now. And if you're watching this video, don't forget to like and subscribe because I will be posting this type of content. Every single day I'll be having videos going over just different sectors and different indexes, as well as I may throw in a few stocks that I'm watching here and there that may have some high volatility and things of that nature. So if you enjoy these type of videos, like I said, subscribe, leave a like, and let's hop straight into this thing. So what I normally do is go over my economic indicators, but for some reason my economic indicator list has not updated yet. So what I'm gonna do in the future is I'm gonna have my Instagram page, which I actually don't have up right now, but I'm gonna have my Instagram page where I post all of my economic data, news, and all my big economic headline, political news, and things of that nature onto that page, so you guys can get some of that information. But as of right now, the page hasn't loaded up, but all the data is still is kind of lagging, so we don't have that data yet. But the markets are open today to about 1 o'clock, almost 12:40, and the market has used up most of its volatility, most of its volume, and so we can get a good a good gauge in the overall markets just to put together some assumptions. So let's hop straight into this. First thing we always do here is start with the E-mini S&P 500 indexes. And I didn't make a video yesterday about this, but today I am making this video letting you guys know that video that I made Sunday, uh, if you watched that one, you remember when I said that we're still in this downward slope here in the S&P 500. And so you can see it's a bit of a retracement that we were having here, and the retracement is on some pretty high volume relative to its previous volume, and we can see that it is pulling back. We hit the trend line up here as resistance, which was also at the 21 in the 50-day. We came back down, boom, we did it again, and I said to you all that if it closes below the previous low day candle, which is about right here, that we could see some pretty high selling pressure. Now, today is that day after that close of the previous high day low, and we can see that right now it's looking a bit weak. It's looking a bit indecisive. Now, volume is starting to slow down on its way down, which is leading me to believe that since that volume is kind of dispersing right now, we could potentially see a reversal here. Now, the reversal won't actually start until we get above that trend line. So once we break out that trend line and we see some volume start to kick back in towards the upside, we see volatility in the VIX start to recompose itself back to those normal levels, then that's when we can be looking for the market to put in, new highs. But as of right now, you can see just the indecisiveness right here. If we go to the 4-hour chart, we can also see that as well. That the market seems to be on the 4-hour chart putting in a higher low right here. You can see the double bottom here. We came up, sellers. There was a agreeable amount of sellers up at this point here, which pushed the market right back down yesterday. And that's, I didn't make my video yesterday, but today there was an agreeable amount of sellers up at that level here at this trend line, psychological level, which caused the market to be pushed down. Now, today the market opened up, and it opened up and seemed to look pretty strong on the open. But as of right now, on the 4-hour, we're getting rejected off that 21 to 50. And it's looking like some selling pressures coming back in off some volume as well, off some pretty big volume. So we still have room down to these lower levels here at this support down here. It's still very possible that the sellers bring bring it down to those levels. It's not impossible, you all. It can happen. Like I said, this trend, this downwards momentum does not end until we break above that trend line. So that's what we have here for the S&P 500. Looking at finding the cues. Looking at the cues here, let's go to the daily chart. Same thing going on here. Cues having that downwards momentum, having that downward selling pressure. We're really close to the 180 on this one. It's catching up pretty quickly. And we can see the same thing happening overhead resistance with that trend line. Today, though, for the market on the Qs, which is the Nasdaq, it's looking pretty weak. We already filled the gap, and we have some room to get down to this resistance, around 350-ish. And we could, if we break below that level, bounce off that 180 and make our way down to the 180. Now, anything below the 180 is considered, excuse me, anything below the 180 is considered bearishness in the markets. But at the same with the S&P 500, volume is sort of contracting. With that being said, if the volume doesn't pick up, the selling pressure could be potentially taken over by those buyers, leading into a break above that trend line. And we could see higher highs in this market. But as of right now, we're not really seeing that. We're seeing the market still, and my motto is, we take what the market gives us. We don't try to confuse anything. We take what the market gives us. If we think of, my thing is, I'm an options trader. I don't do a lot of predicting. I see what I see, and I use volatility to my favor. So volume, volatility, those things are big key factors as to what is going on. And the decreasing volume is showing me that this trend is kind of exhausting. Doesn't mean that it's impossible. Doesn't mean that the volume can't pick back up. But as of right now, the volume is exhausting. We wait for confirmation, and then we take action from there. So that's for the cues. The next stock, RUT. Now, RUT is getting even tighter and tighter into that range. The range on RUT is just about nothing, We have a very small range. You can see beautiful for butterflies, beautiful for iron condors, if you want to play it that way. Beautiful for writing puts, beautiful for writing calls. This thing is not going anywhere. And it is quite interesting to see. I've been watching RUT, the small cap index, for quite a while now, the Russell 2000, and I've been waiting for a breakout. And my assumption is that once that 180 starts to actually make contact with price and the market stays in bullish territory, I believe that it is going to break to all-time highs. Now, I think this is just the balloon effect, and the balloon effect is when you have a balloon and you got a bucket of water or a pool. You take the balloon, you shove it in the water, right? What is the balloon going to do? It's going to fight to get back to the surface. As soon as you let go of that balloon, boom, momentum goes to the upside. I feel like this is what this is doing here. I could be wrong though, but that is my assumption on it. I'm very confident that that is what's going to happen. If anything, if it breaks to the downside, which is, you know, it's very far from the downside, but if it does break to the downside, we would have to see quite a bit of selling pressure before that actually happens. And, unless the broader market goes into a recession, I don't really see that happening anytime soon. So, RUT still in that very small ATR range, and still having a big eye on this one to make new highs. So that is for the Russell 2000. The next one we will be looking at is the Volatility Index, VIX. So let me move myself out the way here. So volatility. We had those higher levels here of volatility at 24. Right now, volatility is made its way back down under 19, under 20-ish. But today, it looks like, well, volatility still looks like, there is a nicely formed red candle right now. The day isn't ended, so that red candle could potentially turn into a green candle. Yesterday, we had a pretty indecisive day with the markets. We had like a doji here going on, but right now we have a red candle, which is showing us some weakness, some fear coming back into the markets, but we're still, at those lower levels than previously. What we want to see is VIX get back down to the 18, 17 level. When we get back down to that level, that's meaning that fear factor is back stabilized, and markets could see a turn from there. So pay attention to the volatility of the VIX index every single time that you look to make assumptions in the market, because it'll let you know, whether or not, there is fear in the market. And if there's fear in the market, fear equates to sell-offs, and you could also sell the fear. So when there is fear in the market, you could position yourself to maybe buy a dip, or to maybe sell puts, or to do whatever strategy you want to the upside, once that fear goes back to its normal levels. So that is for the VIX. Looking at these bonds here, bonds were coming off yesterday, and coming off pretty sharply, but bonds today are up quite a bit. We are seeing that we're having this high. If we see close here, that could be a confirmation for, the close above close above the high of close below the previous high day. So we can see that. We can see if it closes here. We can see the next candle open up, and see that go higher. But with the bonds selling off, bonds give us a pretty good description of what the market feels interest rates are doing to the market. So when interest rates decline, bonds will typically sell off. When interest rates rise, bonds will typically uptrend, and selling off bonds are typically okay for the market, but skyrocketing or extremely volatile bonds, so bonds that are having sharp sell-offs, isn't typically good, and bonds that are having sharp uptrends typically isn't good as well. Usually we want to see kind of stability in between the both of them. So bonds right now kind of just in that stable point, up a little bit today, and just want to watch and continue to look at that, and it could just be like another one of these. We could continue this downtrend of bonds, showing us that interest rates are still being cut lower, and that does have an impact on the market. But as of right now, um, bonds just up by a little bit here. You can see up by about almost a basis point. Not quite just yet, but almost up by a basis point. So just paying attention to that. And that's all I got for you guys today. If you guys enjoyed this video, this market breakdown, leave a like, comment, and subscribe to this channel. Like I said, I'll be making my Instagram page, which is going to be at Stock Indices, where I give you guys all of my economic data reports will be posted there. All of my political, economic news, headlines, and things of that nature. Uh, Volatile stocks that you guys may want to see, top gainers and top decliners, things that I'm watching, will all be posted to Stock Indices. So I'll let you know, guys, know when that page is up. I'm just letting you know that it will be up sometime in the future, and it'll be very informative for you guys to go ahead and view that. And yeah, so if you enjoyed this video, leave that thumbs up. It'll really do me some favor. I'm trying to grow this channel, I'm trying to inspire, motivate more people to get involved in the stock market, and really make some money. It's a beautiful market to be in. There's always opportunity in it, and you can make money from just sitting at your house. It seems crazy, but it is if you really take the time. It's not a get rich quick scheme, but if you really take the time to do it and to educate yourself, it is 100% possible. So you guys have a great rest of your day, and I will see you in the next one.